Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf and Nam Phan of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And we made this announcement last week. We're going to make it again. Starting December 19th, The Best of Investing is moving to 8 p.m. on Saturday on Salem's sister station, KTRB 860, The Answer. So make sure that when you come on December 19th and you go, wait a minute, where's my favorite show, The Best of Investing? You look it up and you find out we're moving to 8 p.m. on KTRB 860. Today's trivia theme is celebrities. All right, guys. Let's see. First of all, I got a couple of things. Did you guys notice that Bitcoin is close to its all-time high? Remember, it was at 20,000.
Well, you checked it today because I think as of earlier this week, it was just bumping up against it. It actually cracked 20,000. Do we know?
It came very, very close. Very close. I don't know if it's cracked it yet, but I just kind of glancing
I'm looking
at
it up as we speak live.
So what does
Remember
this
the listener
mean?
from a couple of years ago that lambasted us for sort of criticizing Bitcoin?
Yeah,
that's true. And
he's listening right now. He's like, ha ha.
That's right.
So was it a year ago or 2 years ago that it was at this 19,000?
I think it was 2 years ago.
Yeah. So 19,500 and change as of the end of today. Yeah, it's back up again. I still remember every time I think about Bitcoin, I remember going to, Edward, you and I went to, one of the many money shows that we've gone to over the years. And again, this was 2 years ago, I think now. And there was several Bitcoin companies as investment options. Some were putting funds together.
Cryptocurrency.
Cryptocurrency, right? Yeah, not Bitcoin. I'm sorry. They were cryptocurrency funds. Some of them Bitcoin related, some not.
Yeah.
And I met the mother of one of the founders of one of those companies, and she was sitting by herself. We got to chatting, and she was just very, very pleased with her son and everything. And she said to me, she whispered to me, "I hear Bitcoin's going to 40,000." With this knowing look on her face and smile, and I said, well, I hope you're right. But of course, it didn't then, and it hasn't, and it may never will. But I still, personally speaking, I don't feel any different about Bitcoin today than I did 2 years ago, even though I think blockchain, the technology around blockchain and cryptocurrency, there's a lot of amazing things happening. In fact, in our neck of the woods in mortgage lending and purchasing of mortgage debt, blockchain is entering the market in a big way. But Bitcoin in and of itself, I still think it's basically virtual gold.
It's
it's virtual gold. And how many articles do we continue to see of people who lose their entire Bitcoin stash? It just disappears because of the fraud and hacking that's in there. So even if you wanted to put 100 grand in Bitcoin, where would you keep it, and how do you know the company you're keeping it with that's holding your wallet is actually secure?
And how do
you really want to risk real money with that?
Is there a way to get out also? I mean, I honestly don't know.
Well, it is. There's liquid.
Yeah.
There's liquidity. It's just that if you're buying it to invest it and hold it like you might gold because you think it's going to outperform, say, stocks and real estate in the coming years. Well, maybe you're correct about that, but you better be careful about what company you choose to be your online electronic wallet, because again, it's those companies that get hacked. And people's accounts literally just disappear overnight. And so anyway, I'm not convinced it's a safe way to put your money to work.
Well, you mentioned blockchain, and there's probably a bunch of people in the audience who don't understand blockchain. Could you give us, spend just a couple of quick minutes explaining it?
Really? Are you kidding me? How could you ask? I don't know that there's anybody in our vast radio audience that could. In fact, I'm not sure I know anyone who could answer that question other than maybe who's the founder of SoFi and Figure?
Oh, Michael Cagney.
Mike Cagney. Yeah. In fact, I read a blog post from Michael Cagney, who was the founder of SoFi and now the founder of Figure. And Figure's a blockchain-based lender. and they're looking for a national bank charter right now so they can help expand their business. But essentially, having your records and your transactions on blockchain is supposed to eliminate fraud, or at least reduce the aspects of fraud and create efficiencies in the marketplace so that you can trade data and information. And that's, of course, just for the mortgage industry, which we're part of. But there's just, I would fail miserably trying to
I mean, it's sort of a checks and
anyone
balances type of thing. Is it sort of a checks and balances type of thing?
Yeah. Decentralized. It's
the biggest problem with blockchain and cryptocurrency is the fact that nobody really understands what it is. And those that do, well, good for them, but they're in a very, very vast minority. You want to talk about the top 0.0001% of the population, they're them.
All right. Hey, guys, we're going to cut to our first commercial break here. Here's the first question. What Hollywood starlet, well, I'd say star, not starlet, was arrested for shoplifting from Saks Fifth Avenue in Beverly Hills? You remember that? She was arrested for shoplifting from Saks Fifth Avenue in Beverly Hills. I can't remember the year, but I think it was probably a good 10, 15 years ago. Call 888-912-1190. The first caller with the correct answer is going to win the tanning certificate. And want to make a mention for Mountain Mike's Pizza in San Rafael, baking pizza the way it ought to be. They are open for pickup. Very, very good pizza. And every time I mention them, I keep thinking about their great pepperoni cheese pizza. It's just mouth water.
And every time you mention them, we know where you're going after we.
I know, exactly. I'm going to Mike's Pizza in San Rafael. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We got a lot of good stuff to talk about. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here, along with Mark Humph and Nam Phan of Pacific Private Money. First trivia question. What Hollywood star or starlet was arrested for shoplifting from Saks Fifth Avenue in Beverly Hills? Who was that?
Do you remember that? Her name's on the tip of my tongue. I think she used to live in Petaluma, too.
Winona, right?
Yeah.
Winona Ryder. Did she really live in Petaluma? I didn't know that.
She did for a short period of time. That was our Petaluma claim to fame.
Close enough to Nevada to take credit.
Okay.
Petaluma, also known as North Nevada.
North Nevada. Yeah. So also I was noticing that the euro is at 1.2148, and there was a time not too long ago when it was almost at par with the dollar. So I'm looking at this and going, if obviously a lot of people are not traveling to Europe anyway because of COVID, but if you go there, you're going to get smoked by 21% of the value of the dollar.
Right.
So I'm just kind of thinking, okay, well, what's going on? Is it just that the dollar is just dropping like a rock?
It has been. That has been in the news lately. The dollar has been dropping, and again, depending on what side of the fence you're on, that's either good news or horrible news. So, it makes certain things more expensive to purchase and certain things cheaper to purchase. So it's really when you're dealing with currencies in different countries and exchange rates, that fluctuation really is. It's neither good news or bad news overall, because it really depends on whether you're an importer, an exporter, a manufacturer. So it's really, I take that kind of news with a grain of salt, because I think for most of us, what we're really focused on is what's happening here at home. What are the things that influence mostly our retirement savings, our ability to make money and to grow money, and how many euros we can buy with a dollar. It's great to know if you're traveling, but at the end of the day, unless you're involved in international trade, it's really, in my opinion, doesn't have a huge impact.
Okay.
But anyway, it's funny because we started, Edward, you threw out a couple of interesting comments there about Bitcoin and talked a little bit about cryptocurrency. But I was just thinking about, as I was doing show prep today, I'm looking through the various websites, news consolidation websites, looking for anything new and exciting to report. And I got to tell you, it just, so much of what's happening in 2020 just feels like we're in Groundhog Day. And as I'm looking at the headlines for this week, the first week in December 2020, we could do the exact same show we did 3 months ago, and there's really, in terms of what we typically talk about, which is residential real estate, mortgage lending, what's happening in the stock market, what's happening with real estate prices and values. The news is really unchanged. Every month that's gone by in the last several months, we see year-over-year numbers in real estate usually going in one direction, which is up. So prices are up, sales volume is up, unit sales volume is down because inventory is getting crushed. There seems to be a lot of demand for people who want to move around.
Hasn't San Francisco dropped a little bit in price?
No, San Francisco prices, again, you got to read between the lines and read the tea leaves there. San Francisco home prices are up in totality, residential home prices. Condo prices are down 17%, wow. Which is interesting. But the activity, they're selling like hotcakes because people are taking advantage of the sales. So unit sales of condos are up. Prices are discounted. People who are selling know that and have built that expectation into their pricing if they've done it properly. But single-family homes year over year are up in San Francisco, not by a lot, maybe 2 or 3%, I think is the last number I saw. The San Francisco Bay Area as a whole is up year over year, according to Case-Shiller, based on price per square foot of actual closed sales. And this information that we have today is from September. It's always a little bit 2 months behind. So, and this came out last week, up 6% year over year. So housing prices appreciated 6% year over year based on price per square foot. And that's a blended number in the San Francisco Bay Area between, low, medium, and high-priced homes.
I thought we were hearing about, everyone moving out of San Francisco because they can't get to their office and they're in, houses are too close together, not enough room. That's not the case?
Well, no, it is the case. There's a lot of activity there are people moving out of San Francisco, putting their homes on the market, but single-family residential home prices have not gone down. At least the metrics aren't there yet. The numbers don't bear that. They're still selling at similar prices that they have been selling at all year. The condos are the ones that have been suffering because there's been a shift in buyer demand, home buyer demand, and that is they, because of COVID, because of shelter in place, they want larger homes, homes with yards, homes with amenities. And so what you're seeing is the suburbs are becoming more popular, and any home that goes on the market that's priced properly in any suburb, in fact, any suburb nationwide is seeing quite a bit of activity. Talking about Case-Shiller, overall in the United States, home prices are up 7% overall as of the end of September, and 6% in the San Francisco Bay Area. Phoenix, Seattle, and San Diego were all in double digits. Phoenix 11%, Seattle 10%, San Diego just a tick under 10% year-over-year price increases. Again, unexpected. This was not expected to happen, but because of COVID and demand for people wanting to move elsewhere, we're seeing continued home price appreciation all over.
Wow. All right, guys, we're going to cut to our second commercial break. Celebrities are the theme today. Which celebrity had to issue an apology after her cell phone was hacked and all of her celebrity friends' phone numbers were posted on the internet? I don't know if you remember that. And again, I think this was probably a few years ago, not 20 years ago, but a few years ago. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Again, here's the question. Which celebrity had to issue an apology after her cell phone was hacked and all of her celebrity friends' phone numbers were posted on the internet? All right, stay with us. You are listening to The Best of Investing. We're going to be right back.
Stretch it out.
Welcome back to The Best of Investing. Edward Brown along with Mark Hanf and Nam Phan here. Let's see, second trivia question. Which celebrity had to issue an apology after her cell phone was hacked? And all of her celebrity friends' phone numbers were posted on the internet.
Commend you for keeping up with celebrity gossip, Edward.
Yeah. You're getting these feeds from your People magazine app, or what?
Exactly. No, it was Paris Hilton.
Oh, yeah, Paris.
Story. Hey guys,
did your phone number get leaked from that too?
That was a long time ago, because she's not even in the news anymore.
I know.
I know.
It's like 10 years ago.
Yeah.
It's like,
hey, you know what? Rotary phones never got hacked, so there was some.
Well, that's true. The answer was going to be Mary Pickford, but then you'd have to go back 100 years. That doesn't work. Hey, make a quick mention here for the Hotel San Luis Obispo is a cultural crossroad where adventure becomes a life well lived. There's steps from downtown, and you head to the rooftops for sips of small plates amidst lush planted greenery with stellar views over rolling hills. California beach towns are just up the road. Check them out at hotel-slo.com or call 805-235-0700. All right, Nam, you wanted to dovetail off of what Mark was talking about?
Yeah, in the last thing Mark was talking about the robust real estate market and all of the activity we're seeing. Part of that, or a lot of that, is driven by the continued low rates and just this
another record this week, huh?
Yeah, another record.
Jeez, another record low.
Hasn't been this low since 1971. So the 30-year fixed rate mortgage fell to 2.71%, the lowest number ever recorded by Freddie Mac's weekly survey, as I mentioned, since 1971. So
the survey dates back to 71, but I think 2.71 is actually the lowest it's ever been.
Wow.
I think it's. I don't think we've ever had 2.7% mortgage rates for 30-year mortgages. So pretty amazing. Other articles that mention that prices are going up and rates are going low. They're kind of canceling each other out. So there's still, it still presents an affordability issue with many would-be home buyers. And the fact that the market is still, by all measures robust. It's only really robust in terms of homes that go on the market sell quickly. There's not much inventory. You put your house on the market, you may get multiple offers, but there's still only a fraction of the number of homes available or on the market that there have been in prior years. And in fact, we've not yet returned to the markets pre-2006 in terms of annual unit sales. So annual unit sales of homes in 2004, 2005, 2006 were 5 times higher than what we're selling today. I mean, it's amazing the differential in unit volumes. And so, we haven't been, notwithstanding what's happened to real estate in general since 2010, we've had a 10-year run of great returns and great appreciation in residential real estate in the last 10 years, but we never really saw a return to the construction and development and building of units to satisfy the organic growth of population in California and elsewhere. And so we've just, every single year, it seems for the last several years, they say, well, the good news is real estate prices are up, but the bad news are we still are only selling a fraction of the number of units, and we're only building a fraction of the number of units we need to build in order to sustain, an equitable housing market where buyers have a choice. And
well, you think of it too,
that's what's driving up that's partially what's driving up values, is just simple supply and demand, which is it doesn't create necessarily a bubble, but it's bubble-like.
And then the costs of constructions has increased, especially in California with the fires and all that, timber, just materials, and then labor. So, you look at that and you go, okay, how much does it cost to build a new home? What can I sell it for? So, and then with the economics of all these extra fees imposed by cities and counties, it's challenging.
Yeah, we're still waiting for fees in counties to make it easier to build a home and to lower all the fees they charge, but that doesn't seem to be happening. And in terms of housing costs, you're right. The cost of a 2x4 is dramatically higher today than it was a year ago, and than it was 2 years ago or 5 years ago. cement, sheetrock, all of those components. So even though we live in an environment where the Wall Street Journal tells us that we basically have no inflation, and 2% CPI inflation rate feels pretty much like no inflation, right? But then, you know, what about everything related to home buying, home pricing, home building, costs of construction? Those are all up dramatically. There is a real inflation rate happening in those areas that don't get reflected in the CPI, which is why, you know, it's just an interesting conversation to have about, you know, what's real and what's true. And and sometimes you see a lot of people complaining online and elsewhere that, you know, it's a lie to say there's no inflation, because look at these other areas of costs. And then on the flip side, we do have deflation because the price of technology keeps going down. We can buy more power for less cost per gigabyte. So there's a lot of, it's a complicated issue, I guess, is the point I'm making.
Well,
It's
Wall
just
Street
not, it
Journal
doesn't.
has not had to purchase a 2x4 recently, so.
Right, and they're using a lot of technology now, and their online edition, I think, is more popular than their paper editions these days, and they charge even more for it than their paper edition.
Wow.
So some things go up, some things go down, some things get more efficient, and the pace of life keeps getting faster and faster.
Faster.
Hurry up!
Our inboxes are getting fuller and fuller.
Wait, what's
Does anybody you know get less than 500 emails a day?
Oh.
You know what's interesting? I think I'm spending less time on the phone because I think people have just gotten used to communicating by email. My emails or text have blown up in the last 6 months compared to prior to that. I think a lot of people would just like to meet in person or previously, or you know, talk on the phone. These days, it's more email. Yeah, there's more Zoom, but our email inbox.
Well, it's pretty
Mark Cuban just wrote a blog post recently. I haven't read it yet. Said, I get over 1,000 emails a day. Here's how you can get my attention. So I have to go to read that. Now I'm curious.
Smart.
That was the headline.
Yeah. Now he's going to get 5,000 a day when people read it. All right, here's our third trivia question. In a bizarre bit of celebrity behavior, who dangled his baby from the third floor balcony of a German hotel on November 20th, 2002? You remember that? This one you remember. Okay. Call 888-912-1190 to answer this question. And you get the first caller with the correct answer is going to win that tanning certificate, which is worth over $100. In a bizarre bit of a celebrity behavior, who dangled his baby from the third floor balcony of a German hotel on November 20th, 2002? All right, stay with us.
Literal or figurative, baby, Edward?
Okay, wait, hold on. We'll be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hunt and Nam Phan of Pacific Private Money. Third trivia question was, in a bizarre bit of celebrity behavior, who dangled his baby from the third floor balcony of a German hotel on November 20th, 2002?
That was Michael Jackson.
That was pretty good. Yes, that is correct. All right. 1 out of 3 is not very good for this show, but that'll get you into the Hall of Fame if you're in baseball.
That's true.
Okay. So, Nam, why don't you give us a deal of the week?
Yeah, so one of the deals of the week this week kind of dovetails again to what Mark was talking about earlier, where you've got really low interest rates, you've got a really hot real estate market, and the result is we're seeing an incredible, or conventional lenders are seeing an incredible, increase in loan applications, right? They want to take advantage of the low rates, borrowers do, and the real estate market is really hot. And so to be competitive in that space, borrowers are having to make really aggressive offers. Anything from, no sale contingency, which, they can do by coming to Pacific Private Money if they have a home to sell. And this deal of the week is a bridge loan. But they're also not only doing a no sale contingency, but they're also doing a fast close. And that's counter to what conventional lenders are able to do these days. Because they have so many loans in their pipeline, it's taking forever. I think last week, Mark, maybe it was last week or a previous show where you're talking about, trying to get a refi done with Wells Fargo, and it takes 3 months. Try and get a purchase done in time to meet the deadlines of an escrow or an offer you're putting on a home is tough.
Yeah.
So, buyers these days are making these really aggressive offers saying we'll close quickly, and then crossing their fingers and hoping that their lender can close on time. And we've had so many bridge loans lately, or loans lately, that have come to us at the 11th hour because their bank financing is taking longer. It's not necessarily that it's falling through, it's just that it's taking longer than the escrow period is, that was written into the contract.
Mm-hmm.
And so this deal of the week is just kind of your typical bridge loans, $900,000 home or loan here in Nevada. But the crazy thing is, this loan we closed this recently, it's already going to pay off. So we get, we have one that is closing this week where we already got a payoff demand, because they're simultaneously still working on their conventional loan. It just took longer than close of escrow.
Well,
and
you got to figure with all of the people working from home, there's just so little efficiency with that, rather than people just being in the office and getting things done.
Yeah, so we're getting a lot of loans that are coming to us because these are, these FICO scores on these borrowers are insane, 750 plus, A quality borrowers. It's just their conventional loan took longer. We're able to provide a bridge loan close very quickly. So, I think our fastest this year was 5 days. But, let's say we close in 2 weeks, not too far behind is that conventional loan that needed that extra time. They've got it in place, and now shortly after we get the loan closed, we're getting a payoff demand. So, we're happy to do these all day long, but just, highlights what's going on in the marketplace.
Yeah, and it highlights the fact that borrowing money from a lender like Pacific Private Money, whether you call it a hard money loan, a private money loan, a bridge loan, it's really a tool. It's not about, oh, gee, why would anybody pay 8% or 9% for money when you can get it from a bank at 3 or 2.7? Well, it has nothing to do with that. That's water and oil. We're talking about two completely different things. It's using it's going to a company like Pacific Private Money who makes money, capital, available to rent on a short-term basis that's highly reliable, and you can get very, very quickly. So, for example, that loan scenario that Nam just talked about was from our rock star loan agent, Sophia Najibi. And another one of her files this week that was where the loan was nearly $2 million came to us because their financing fell out. They were running out of time. The seller was balking because they already had a backup offer that was going to pay them a higher price, which is something we hear all the time. But the borrower, the buyer, had it in contract and they needed to close. And it got to a point, and this actually happened today, where the buyers, as well as our loan agent Sophia, are asking us at Pacific, asking our funding team to go ahead and fund today because the seller was starting to delay, hoping that this hoping to be able to cancel the deal and have it all fall out because it was going to be beyond the last day on the contract. So sellers started playing games. We just went ahead, again, because we have the flexibility and we do this all the time. We went ahead and wired the funds a day early to ensure the seller's performance so that the buyer could actually get that house that they came to us to borrow money as a tool to be able to secure that contract and secure that transaction. So basically, we're in the business of making magic happen, making transactions happen, rescuing deals, saving deposit monies that are at risk if you don't close by Friday. This is what we do, and we're one of the few lenders in the entire state of California that actually do these kind of loans with this kind of speed and flexibility. And we've been doing it for 5 years. We've done hundreds of transactions like this now in the era of Dodd-Frank restrictions, and we're really, really good at it.
And for more information?
Hey, let me contribute here. Huh? Call 415-883-2150 or visit us online at www.pacificprivatemoney.com.
Yeah, absolutely. So it's funny because we still run into realtors who really don't even realize that this product, this tool, this type of loan is available, that they could help more clients close more deals. And sometimes we talk to a real estate agent, they'll go, "What are you talking about? Hard money? Well, I would never recommend a client do that." Because, you know, hard money loans had a stigma 20 years ago.
Yeah.
You know, the lender of last resort, you know, you loan to people with one foot in bankruptcy or foreclosure. You know, that's not what the money, you know, those types of loans have been disallowed through Dodd-Frank regulations. They haven't been around for years. But there's still that stigma that a lot of realtors carry because they just don't know. They just don't realize how many more deals they could have closed this year had they known that they could be helpful to their borrower client in the form of providing a recommendation for a fast and easy bridge loan. Exactly. And I think part of it's the fear of, because of the perceived expense, when in fact we oftentimes save people money in the end by being able to close quickly, efficiently, and at a price that if their realtor is savvy, they could mimic an all-cash offer.
Very good.
So if you're a realtor out there and you don't know anything about this, what we're talking about, and you want more information about this product, you know, please do give us a call at 415-883-2150. Because I'll tell you right now, we work with hundreds of realtors who absolutely love the fact that this tool is available to them, that they can have in their arsenal to help close more loans and find more ready, willing, and able buyers who want to compete with cash offers.
Very good. All right. Call them at pacificprivatemoney.com. I guess the website, or call 415-883-2150. Stay with us. The Best of Investing will be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and Nam Phan of Pacific Private Money. No trivia question, but Nam, you wanted to ask us some kind of predictions?
Yeah, since it's December, and I was just thinking back to this time last year, you know, who made predictions, and you know, how many of them got anything right? Who would have predicted anything that happened this year? So, you know, even going into February and March, you know, when the pandemic first hit, we just thought, oh, geez, everything's going to tank. You know, home prices would potentially tank, but it's been nothing but the opposite. So I wanted to ask these questions for predicting what we think may happen in 2021. So I'll ask you guys, for real estate, do we think it will depreciate, go up 5%, or 10% plus by this time next year?
I think it's going to stay.
Well, you didn't have zero in there. If I had to bet, I would say that Bay Area home price appreciation, actually I'll just say across California, likely a net 0 to plus 5% would be my range.
Exactly.
Okay.
Yeah, mine too. Okay.
All right. Next question. Rates. Will they be below 3.5 or above 3.5?
Below 3.5.
Yeah, I think being at 2.7, they're probably going to be, 3.5. That would actually be really amazing if we were still 3.5 next year. I think that's probably likely.
You can. Okay. I mean, that'll tank the economy even more. Next prediction.
Dow, do you think it'll stay above, or you think it'll go above 30,000 and stay there, or dip back below 30,000?
I think we'll have a pullback for a while.
Yeah, that's an interesting one. You know, a year ago I predicted the stock market to underperform in 2021, and that was before the pandemic. And it's actually overperformed, hitting 30,000 or nearly 30,000 for the first time. Yeah, I'm going to stick with last year's prediction, and I do think the market will underperform, and it wouldn't surprise me if it was below 30,000 this time next year. So if you're an index investor, I think that's a risky move to count on that for continued growth.
Next.
Unemployment currently 6.9%. Do you think it'll be below 4 or above 4 this time next year?
I think it's still going to be
above
4. Yeah.
Yeah, I think there's going to be so much fallout from the pandemic that a lot of jobs are not going to return, a lot of companies are not going to return. I saw an article this week that boomers and immigrants were among those being pushed out of jobs because of lower job availability right now, and that might remain true by this time next year.
Okay. All right. Last question. Celebrity use. Edward, will you be able to use your Britney Spears tickets next year? Yes or no?
Come on, be serious now. What's the last one? Because we got to cut. We're gonna have to cut out of here pretty soon.
That is.
That was it.
Will we be able to go to concerts or ball games?
Okay, that's it. Will we be able to go to sporting events or concerts?
Yeah, yes, we will. Even good old.
Yes, I think so too. I have high hopes for the vaccines.
He said by September you might see football stadiums full by September.
Okay, we got our show for next December.
All right.
That's right. And audience, don't forget we are moving on December 19th. To 8 p.m. on KTRB 860, The Answer. All right, guys, here's our thoughts for the day. I am sick of following my dreams. I'm just going to ask where they're going and hook up with them later. And raisin cookies that look like chocolate chip cookies are the reasons I have trust issues. Think about that.
That I believe, Edward.
Yes.
I know how much you like chocolate.
I'm all eating into this chocolate chip cookie and I go, raisins? Who put raisins in here?
I just spit it out on the floor.
All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.